Time now to spotlight American Superconductor. The energy tech company just reported earnings yesterday afternoon. Shows impressive growth year over year. Joining us now for more, we've got Daniel McGahn, Chairman and President and CEO of American Superconductor. Thank you so much for joining us today, Daniel. So let's talk about your latest quarter. You all reported adjusted EPS 12 cents a share. Revenue came in at more than 66.6 million. Both of those beat estimates. What was the biggest driver here of growth, especially when you look at that revenue growth?
Yeah, the business is really outperforming our expectations and external expectations as well. We've seen a pretty dramatic uptick in revenue. We saw larger orders as well, bookings within the quarter. It's driven across the business, so there's a number of drivers for us. It really centers around the grid. The grid is not able to handle what we're asking it to do, be it generate power for industrial manufacturing that's being reshored to the U.S., be it for critical components like semiconductors that need to be built all over the world. All of these operations have a critical concern for power. The move for decarbonization continues in Europe, and that drives part of our business. But we're really an American-focused business, which really puts us in a unique position given the climate today. And I think it will bode well for the business in future periods and years as well.
Okay, so that begs the question then, how much tariff risk or tariff exposure do you have if you're mostly focused on the U.S.? Is there some tariff risk?
We've been able to minimize it very well so far. So the way the business is designed is a bit of a natural hedge against it. So about 75% of revenue come from the U.S. directly. We make almost all our product in the U.S. on almost all U.S. supply chain. We've been able to be nimble and be able to change suppliers as we need to. We really almost see it as an opportunity, as there's a strong investment to make products in America. They're going to need power and electricity. They're going to need high levels of quality power and reliable power. That puts us in a very unique position as really the only U.S. player in what we do to be able to deliver those products to the substations that are going to power the future for industry.
Let me ask you about your margins. Gross margins improved significantly on a year-over-year basis. What do you attribute that to? Is it pricing? Is it operational efficiency? Or is it a mix of that?
It's all the above. So a lot of it's scale. A lot of it is how we manage supply chain. We're finding more and more we're doing larger projects. We're doing repeat business where we're making the same kind of products over and over again, more and more for the same kinds of customers. So that allows us to get better operational leverage through the business. But the principal driver is scale. So we've quadrupled revenue in the past about 2 years or so. We've been on a very dramatic uptick. And the broader market seems to have a series of tailwinds that are going to be at our back and continue to be at our back.
How sustainable then is that growth? I mean, when you mention that jump in revenue and the progress you have made on gross margins, I mean, those are huge jumps and certainly something that you have to acknowledge. But how sustainable is that through fiscal year 2025?
Yeah, I think where the business is at today is certainly sustainable. We want to be able to improve it. We want to be able to grow it further. I think the market presents opportunities uniquely for us to be able to do that. We've been able to develop new products. We've been able to do a series of acquisitions that have been able to extend the markets and the product portfolio that we have. We look to try to continue both of those things where we can. But we've been growing at a very nice rate now over several years, and we've been able to deliver very predictable profit as well. So that's really the first time in the company's history we have a very diversified set of products and customers delivering consistent levels of profit.
Okay. Why is the market not seeing your progress? I mean, you all are outperforming the S&P 500 slightly year to date. But given what we just saw in this most recent quarter, what's your message to shareholders and investors?
I think look at the company. It's a very different company than it was 5 years ago or 2 years ago. Sometimes people know us, but they know of us, but they don't really understand exactly what we do. We've been evolving very quickly. We've been growing very quickly. So a lot of it is being sought to be understood, and having a forum like this to be able to talk to you and share our message helps other people to be able to understand this is a very different company on the rise.
So then let me ask that question, because we do have, investors. We have a big retail investor audience. Can you explain to them a little bit about more of what you do now?
Yeah, it's really about power quality and power control. So it's supplying critical infrastructure on the grid or in the factory. And like even the pictures we're showing, a lot of our history has been in wind, but renewables now are probably, a quarter or less than our business. And it's all in India and all in Europe. Our American business, the 75% that's really been driving us and we think will continue to drive us, is really more about power quality, power control for industrial equipment, for manufacturing expansion, as well as traditional power. So we're seeing an entry for us. It's just beginning in powering pipelines and powering a series of different sources of power in the future. That's all new for the company, and it's a new message in the past year or so that we've started to give. And a lot of it is trying to get out and get people to understand the business has evolved pretty dramatically, pretty rapidly.
And then you all have, go ahead. Sorry, Daniel, go ahead.
We go where the markets take us, and that's where we're being taken.
Okay, that's fair. Speaking of where you go next, you all have strong cash flow. You've got solid profitability. You have, more than $85 million in cash on hand. So what's the capital allocation strategy for that? Is it focusing on scale? Is it more innovation? Is it acquisitions? What's the focus of that, or what's the allocation strategy?
I think, first of all, it's scale and how do we leverage what we have. I think second is we're investing in a series of new products for the military. We have a relationship with the U.S. military that's very long. We just entered a new contract last summer with the Royal Canadian Navy. We're now expanding there. We hope to expand to other allied fleets as well. Again, it's critical power control. It's controlling critical systems. So those are kind of the two main areas. And we have a history of doing acquisitions. We've done a number of acquisitions over the past few years that really fit. They're usually an extension of what we're already doing. How do we do more for this customer? How do we provide a better experience for that customer? How do they get more supply for us, be it in the U.S. or directly from us? So those are all kind of the three main areas that we think where the capital is going to need to go. And we're in a situation now as we're starting to generate more profit. It allows us to really think longer term on what are the evolving trends on the grid and how do we go take advantage of them with our customers.
All right, Daniel, thank you so much for your time today. That's Daniel McGahn, Chairman, President, and CEO of American Superconductor, ticker AMSC.